Hey everyone, welcome back to Grumpy Monkey Technical Trading. My name is Michael. We're in real color this time, not that faux yellow that I had before. Had a burnt out bulb, fixed that. This week we're looking at Netflix, everyone's love to hate it stock or love to love it stock. We're going to take a look at the Elliott wave analysis and see how it's doing after earnings. Stay tuned. Alright, Netflix. So Netflix is kind of a fun stock because it's very polarized. There are people in the positive camp, it'll take over the world, gonna destroy cable and movies as we know it, going to produce new content and just dominate any possible realm. And then there's the negative, which is just it's way too overbought. They can't possibly sustain this pace. Someone's gonna replace them. They're not doing anything special. And you're starting to see a little bit of that now with Amazon Prime and HBO Go, people starting to encroach in the market. So it's also one of the fun stocks to evaluate because it's so crazy when news happens. So if there's the announcement of a stock split or price increases or just any sort of investor saying that they really like it, it's going to go up or down at extreme levels. So what I wanted to do is Elliott wave analysis instead, which is based on the principle that the market moves in cycles called waves that are predictable, and that news happens and news may manipulate a trend in the short term, but it's not going to manipulate the cycle of waves and where that stock is in that pattern. So you're going to take maybe a brief departure, but you're going to get back on track if you're in a particular type of cycle. So the main positive cycle or motive cycle is that you have a five-wave pattern. So it goes up, it goes down, it goes up, it goes down, it goes up, at which point you would have a correctional cycle and then possibly either a horizontal sort of waiting period until a new trend is formed, or it would immediately just assume a new trend going up or a new trend going down. So it's a really important analysis to do. It has a couple rules, and this five-wave pattern is the main core principle and basic principle, but it does have a couple of rules, which is that the third wave has to be the longest, and that the fourth wave, the downwards wave, can't go into the number one wave's positive motion. So if we take this here, we go 1 down to 2, up to, you would assume 3, but kind of we're going to go here to 3 because it's more of a general trend, and you can see that 3 is typically the longest, so this makes sense as 3. We're going to go down to 4, and then we're going to start this upward journey up to 5, and that's where we're at currently, is defining that fifth wave. So we know that 3 is going to be the longest, so it's not going to go any longer than this from bottom to top, but it's going to carry on. Now we have this resistance line here that I've defined, so bottom, bottom, top, which is a really strong resistance point in my view. I really like resistance lines that cover both bottoms and tops, as opposed to just being all tops, because it kind of like pinches it in if you think in like construction terms. And so you can see that we're kind of entering that range. So it may touch it again, but since we're in that fifth wave, I would say at that point we're due for a correctional drawback. Which is typically a three-wave pattern, so you go down, up, and then down again until it establishes a new trend, or goes horizontally for a little while until a trend is formed. So I would say at this point, if you're looking at Netflix and you have it, and you are happy with the profit that you've got off of it, and you're looking for an exit, start thinking about an exit now. Set a stop loss. Obviously, if more news comes out, it could drive it up or down, but it's going to try and stay within that fifth wave channel of positive motion. But that fifth wave is the termination point. So if you want to extract that money, put it into something else, we're starting to get to that time. For me personally, I'm kind of bearish on Netflix overall, and that's just because of how my household is, in the sense that we have Netflix, and it seems like every other month we're deciding whether we want to keep it or not. And it's just cheap enough for us to be like, no, whatever, we'll hold on to another month. But we constantly struggle to find content that we want to watch on it. And so I think, at least for my terms as a Gen Y, I guess, that we'll move into this phase where you'll have one for a little while of the year to get its individual content, another one for a different part of the year, maybe HBO Go for a bit of content there, and then another one, and so on and so on. So I think they have an amazing growth rate and certainly can capitalize on the world market, but obviously there's some concerns, and we're probably due for a bit of a retraction at that point. So that's my thought process. If you do want a good resource on Elliott wave analysis, because it's so important in my opinion for trying to predict time, we have this book. Not we, someone else wrote it. They're not giving me any money, but this is a great book that Elliott Wave Principle. I would definitely check it out and give it a read, because it's a great book. So that's our show for today. I look forward to the next show that I've put together, and thank you so far for all your great support. Some subscribers, some comments, that's great. And looking forward to preparing this new. I have a Roth IRA strategy with using options, using covered calls that I'm putting together, and I stay tuned for that because I'm really excited about it. All right, that's it for me. Talk to you later. Bye.